Alrighty, welcome everyone. Thank you for joining this session, Banking Through the Crisis. So after the 2008-2009 global financial crisis, a number of central banks around the world, including the CBN, put in place prudential and other rules to strengthen financial systems. Since then, the Nigerian financial system has grown in leaps and bounds, and for the most part, has been able to weather storms such as oil price crashes, recessions, and all of that. But then it's 2020 and nobody could have predicted the COVID-19 pandemic. As the whole world tries to deal with the effects of the COVID-19 pandemic, certain questions arise. How are Nigerian banks positioned to survive this crisis? What about the fintechs who are the newer entrants into the system and don't have as established systems? What is the role of the CBN to continue to maintain stability and confidence, and perhaps even growth and innovation at this time? I have a panel of experts who will be discussing these issues from different perspectives. And so I will just allow my panelists to very briefly introduce themselves before I then set the ground rules for the session. And so I'll start with Mr. Elegbe. Please go ahead, sir.
Good afternoon. My name is Mitchell Elegbe, and I'm Group CEO at InterSwitch. I'm sure a lot of people in the audience know who InterSwitch is. Very briefly, we are a payment business licensed by the central bank, and primarily we support banks and other financial institutions in terms of using technology to provide services to their customers. Okay, we are currently operating out of Nigeria. There are offices in Kenya, Uganda, and Gambia.
Thank you, sir. Mr. Zegbe, please go next. Mr. Zegbe?
I would last name.
Okay. While we're trying to sort that out, I think Mr. Okay.
Yeah.
All right, we can hear you now.
So my name is Abraham Azebe. I manage what we call retail operations in Access Bank. I've been in banking for over 2 decades, and I'm happy to be here.
Thank you, sir. Mr. Tijani?
Thank you very much. My name is Bosun Tijani. I co-founded the first technology innovation hub in Nigeria, which is now expanded into Rwanda. So we have a design lab in Kigali. But also recently acquired the first tech innovation hub in Africa, which is based out of Nairobi. What we do is to provide a platform and support structure for young Nigerians, but now across the continent, people who believe that they can build the future that they want to see for the continent using technology. We see technology as becoming the key infrastructure that runs the entire economy of Africa in a few years' time. And we believe in putting efforts into supporting startups, but also working with stakeholders to build the systems that can support that innovation to happen over a long period of time.
Great, thank you. We're also going to be hearing from Mr. Musa Jimo, who's the Director of Payment Management System Department, CBN. I think he'll join very shortly, hopefully, we'll sort him out. But I'll just go to the ground rules for the session. This session is supposed to be 1 hour, and so the plan is to have the discussions for 45 minutes and then questions for 15 minutes. So please put your questions in the session chats, and I see a number of people are already using the session chat. So just put your questions in there, and we'll take as many questions as we can. We'd also like to hear from our audience today, and so we have a number of polls that we'll be posting. So please vote on the various issues. And so we'll just go right to the conversation, and I'm going to start with Mr. Azebe, who is Head of Retail Operations from Access Bank. So, Mr. Azebe, because of the pandemic, you know that a lot of retail banks have had to sort of like change their operations, vary their distribution processes, you know, so close branches and all of that. I guess the question is, how are you managing to continue to service your customers while maintaining social distancing and also, having an eye on the future and long and medium term positioning for the bank? Hello?
Much. Obviously, these are very trying times for everyone, both in the banks and the customers. And some of the things that have happened in the past 3-4 months since COVID became a subject for conversation have meant that we've had to rethink how we do our business and how we conduct our operations. First of all, permit me to start by saying that part of the things we did from the very outset was the involvement of Access Bank in the COVID initiative, which is like coming together of the private sector to kind of give back to society and then see how we can help through this whole process those who may be affected adversely. And so that is something that as a bank we've been very focused on. But outside of the COVID venture initiative, what has happened is that banks have their traditional approach of serving customers through traditional brick and mortar structures. During the past couple of months, there has been an increased focus on the use of alternative channels or digital platforms to serve customers day in, day out. And this would cover all products and services that the customers would typically subscribe to in a bank. Of course, these are not new discussions, these are not new conversations, but I think what has happened with COVID is that it has fast-tracked the thinking. And so even a lot of the discussions that are happening today are centered around how do we serve customers outside of the traditional approach. So what you find is that for the most part, the conversations you would see would be around how do we get customers to use our platforms, our mobile platforms, how they would use the products we have, say, for WhatsApp banking, the USSD platforms that are available today. We still have a lot of individuals in the country today who were not fully given to this, or what you see in the past few months has been an increased uptake in this regard. And even in the traditional business of lending them that banks get involved with, we're beginning to see a lot of things happen on these platforms. And the whole idea is to, as much as possible, reduce the requirement for contact with a person-to-person contact or with the bank because we need to do a transaction. Obviously, we still have people who would still want to come to the banks. And part of the things that we've done is to then ensure that even when you come to the bank, you are attended to in a very safe and secure environment. So you'd find that within our banking halls, within our banking premises, you find that there are fewer and fewer people who are coming in to. There's a lot of social distancing that occurs there. And something I should also mention is that, traditionally we think of banks from the mindset of the, say, 300, 400, 500 branches that these banks have. Increasingly, we've seen the presence of the agents or agency banking outlets become an avenue to serve customers. So if I were to use the example of Access Bank today, Access Bank has just about 600 branches across the country. But there are agents across the country, numbering about 15,000, that are available to serve the retail customers who still insist that they probably want to come into the bank to conduct their transaction. And so, given the reach that these large numbers of agency outlets provide, it means that the average individual doesn't necessarily have to come into a physical branch of a bank to transact. And the agents can do practically everything that a bank branch can do. So if you just think that with about 15,000 agents scattered across the country, you would have these agents almost at every street, corner shops near where you may live and where people may want to do their business. So it makes it a lot easier to say we're abiding by the rules that that have become the new normal for us. And that way you do not have to go into a physical bank branch structure. In the business of lending, in the business of transactions, everything is getting moved to these digital platforms that have made it a lot easier to serve the customers, even in the midst of all the difficulties that we have had to contend with. Thank you.
Thank you, sir. So you spoke about the business of lending, which of course is core to any bank's operations. I know that at this time, because the economy has slowed down, some people have lost their jobs, and there's generally a lot of uncertainty. I imagine that will probably impact your credit operations and your collection operations. So how are you handling that? Have you had to put in any new strategies in place in order to ensure that you continue to maintain a level of collections?
Yes, you know, the business of banking and lending. The business of banking involves lending, and the collections when you lend become very critical at a time like this, even more so. What you see happen today is that banks are increasingly giving serious attention to what I would call our risk acceptance criteria. There's a lot of attention given to that. You are very mindful of some of the things that you would typically look at before you make the decision to extend credits to customers. Even beyond that, there are certain ratios that you would typically look at. So for instance, if someone has a facility, you want to be able to measure how the collections are coming in. You want to be able to track some of the payments that have come in. You want to be able to set triggers that are able to say to you that there appears to be a challenge here. Now, having said all of that, externally also, we recognize that given what the impact of COVID has done to many businesses, it therefore means that the cash flows that you typically would expect from a lot of these businesses are not coming as they would typically be expected to. And so banks have taken a proactive measure. So you've had instances where you've had to reconsider the tenors of those facilities that you have given. You've had to extend them to try and align and match them to the realistic cash flows that we're seeing, so that you're not creating a facility and then you're struggling with the inflows that are meant to come in. Additionally, there have been cases where we've had to, as an industry, had to give forbearances, where you've had to say, okay, and I'm sure we would have read this in the news at the time, that in the first few weeks of the lockdown, many institutions, many banks did say to customers, okay, so we're going to give you a 90-day, if you might, moratorium, within which you would not have to pay principal plus interest, so that at least it gives you time to catch your breath, if I might say, and then use that opportunity to recoup whatever gaps that might have been created from this. And for those who, for instance, have exposures that are foreign currency denominated, we've had to talk about bringing those exposures into local currency, because we recognize also that with the issues around dropping crude oil prices and all of that, there are foreign currency exposures that may come back to haunt a lot of borrowers. So we work with them to see how we can bring those into local currency. We've also had
right?
Go ahead, please.
Okay, yeah, so you've also had to consider, you continue to take price their credits at rates that do not align with the reality dealing on one hand. And then on the other hand, we also worked on seeing that the collections that we would typically do are not just tied to physical collections, but also taking it from what I had said earlier about the use of digital platforms to then see that payments and transactions are done on digital platforms that make the flow of transactions a lot easier than if it were going to be in the traditional mode. Of course, we would follow through the value chain of the business that we do business with, so that we are not just focused on the principal, but also on the associated entities that do business. That it makes it easy to track the flow of funds. That way you are able to both balance what the customers are getting and what it is that is happening to the financial institution. It's a delicate balance, really, if I may say, because I don't think that anyone expected what COVID has turned the world into today. And so for each day that comes along, it's a learning process for everyone. And I would say that the regulators have also been playing a very critical role. And by regulators, I'm referring to the central bank. And are properly supervised, so that we have the industry and, of course, the economy continuing to run seamlessly. Thank you.
Thank you, sir. Just before I ask you the last question, I'd like to welcome Mr. Musa Jimoh.
Thank you. Good afternoon.
Good afternoon, Mr. Jimoh.
Good afternoon. Good afternoon. Sorry for the technical issues.
No, we're glad you're here. Thank you. Okay. Just still on that point of loan recovery, you talk about tracking accounts. And just 2 days ago, the CBN issued the GSI guidelines, and that's supposed to aid loan recovery. Can you just tell us a bit about that? How is that going to work in practice?
Okay, so GSI is global standard instruction. So basically, what this is saying is that as a borrower, you more or less give your banker the permission, if I may use that term, to set off whatever money you have in any other bank account that you run within the country, if you're unable to meet your obligations on the accounts you're borrowing. And so with the industry working together, Central Bank, the Nigerian Bank Settlement System, PLC NIPS, a structure has been set up such that for every borrower who borrows as an individual, you would have your bank verification number, and of course the CRMS platform. Were to say that the customer has defaulted and the customer is not making good its obligations. Of course, along the lines of what the prudential guidelines say, it therefore gives the bank the right to reach out through the global standing instruction mandate that you have and through the platform, to reach out to the other banks to check for the places where you have your funds. Now, remember that we have what we call the biometric, the bank verification number, which has your records in terms of your biometric data. And that is available across all banks. And you have a single bank verification number that cuts across every bank account that you run. So if you were to have 15 accounts in the country, it means that that bank verification number is linked to all of those accounts. So it makes it easy to track wherever you may have accounts within the industry. And so basically, in summary, what the global standing instruction is basically saying is, I have the leeway as a creditor bank, to reach out and check the places where you have funds, so I can recoup what those funds, what the payments that are due to the creditor bank is. This obviously only covers though principal and interest. Any of
I think we might have lost Mr. Azebe. While we wait for him to come back on, I think I'll just before I go to Mr. Elegwe, I'll just remind everyone that our polls are live. So please go to the polls facility and answer the questions that we have in there. Thank you. Okay, so Mr. Elegbe, I'd like to get your perspective, right, on what's happening, because we've heard a lot about what's happening with the banks and all of that. But the fintech industry is also reeling from the impact of the COVID-19 pandemic. So how are you dealing with that? How has your business had to like re-strategize, make changes and all of that to ensure that you still stay afloat?
Thank you. Thank you very much. So first, I think it is safe to say that whatever affects the banks affects us. We are service providers to the banks. So it is therefore important to know that we experience things the way the banks experience them. Now, specific to InterSwitch being a fintech organization, we saw a few trends, and these trends vary depending on the channel that the customer decided to use. Just before the lockdown, we noticed there were a lot of POS transactions for obvious reasons. People were trying to stock up and so on and so forth. And the news had gone out there that avoid cash as much as possible. People were trying to use their cards to pay. Some of them doing transfers as means of payment. So we saw a huge jump during that period. But as reality began to hit, people began to have challenges with their jobs, fears that people's salaries were going to be reduced, so people could lose their jobs. We saw a pattern where people became a bit more conservative in the way they spend. Channels like the ATMs, where you physically have to go out to withdraw cash, took a hit for obvious reasons. On the web, we didn't see a huge drop. We noticed a change in pattern. So, for example, sports betting used to be a huge area for a lot of Nigerians. Because of COVID-19 and the fact that the sporting season in Europe was on hold, we didn't see a lot of the betting activity. So traditionally, you will find that there was a drop in transactions linked to betting. But every other area seemed to have been able to sustain itself. We envisaged that fraudsters will take advantage of the situation. They did. But we also tried our best to ensure that we're able to keep operating. Luckily for us, we were able to get support from the central bank, where we were classified as essential services. So part of what we did in InterSwitch was to make sure that some of our staff were kept in hotels around the office to minimize travel distance and ensure that they can continue to support the system. We saw overall a dip. I would say all of this, there was a dip, especially in the month of May. But what we have seen since June is a V-shaped recovery, which basically suggests that as movements became easy for people, they started transacting again. And we have seen things go largely, to a large extent, back to normal. Lastly, just on this point, I'd like to say that the view we have taken in InterSwitch is a long-term view. Something like COVID-19 will come with lots of challenges, okay? For some industries, it will be a positive trigger. So if you're in the pharmacy business or healthcare, for example, it will appear this was a positive trigger for you. But if you're in travel, in entertainment, in the restaurant kind of business, in tourism, for example, this could be a for you. So but I think the key point, the way we see it is that whatever opportunities or challenges came with COVID-19 will go with COVID-19. And so what we are looking at what is happening as a temporary dip in the life of any organization, hoping that as time progresses, as the world gets to have control over COVID-19, we'll see a lot of the original things we've always known to be ongoing, continuing. So we tend to have both a short-term view and a long-term view. And the long-term things will get back to normal. A lot of people say new normal. When we get there, we'll know what is new or what is not new. But when we see that get back to normal over time.
Thank you. We're definitely seeing lifestyle changes just because people aren't moving around as much as they used to. So everyone is switching more to making digital payments and all of that, that would mean that there's probably more pressure on your infrastructure, right? And I imagine that, and you spoke about having to sort of like up your security infrastructure and all of that. But I think it's a good thing that we're seeing more digital payments because, one of the things that we read is that cash can actually be a conduit for the virus. So it's actually a good thing that we're moving away from that. But I mean, how do you think that we can maintain this momentum? You're talking about going back to the way things were before that. And in certain aspects, we want to go back, but not in every aspect. I think we want to maintain this digital payment. What do you think the payment industry can do and the regulator as well can do to maintain the momentum that we've seen as a result of the pandemic?
Well, I think I have a fundamental view that you cannot legislate or force adoption. People gravitate based on their needs. Okay, so if you take the case of a push by individuals to electronic payments because of fear of COVID-19 being transferred through contacts, the primary driver is fear. Okay, if fear goes away, you should envisage that behavior will reverse itself. So the question is, should we continue to use fear? You can't use fear to force adoption. I think it goes back to the fundamental point of beyond COVID-19, there's a strong business case for people to go electronic. And I'm not going to spend time trying to talk about those. That business case was there before COVID-19, and the business case will be after COVID-19. So I do not think it is possible to sustain the gains of COVID-19 after COVID-19. We have to go back to brass tacks. We need to ensure that the fundamentals that drive adoption continues. Of course, there's a big role that policy can play, and that is where the central bank comes in. But I think the way to look at it is not to think that we can use COVID-19. COVID-19 may have made some people adopt electronic payments for the first time. When COVID-19 goes away, the benefits that they derived from adopting electronic payments should be sustainable. And that is where I believe service providers like ourselves, the banks, the regulator, have to put a lot more effort. So what are those things that are fundamentally important to consumers, and how do we ensure that the right policies are in place to encourage them to adopt these things? Using fear of COVID-19, the gain should be temporary, but beyond COVID-19, the fundamentals of the business has to be right, and that is what drives adoption.
Okay, all right, thank you. That's interesting. So you think we should, we're probably going to go back to status quo and then start from there.
But you can see that already. A lot of people are going back to status quo. To be honest with you, how many Nigerians will you give cash today? And they will tell you they won't take it because they're afraid they're going to get COVID-19. They will take the cash and look for sanitizers. Whatever. So I don't think fear is enough. When COVID-19 started, everybody was afraid. But now we're hearing that, oh, if you take this, take Agbo, take this, take that, take this, you will survive it. We are hearing that a lot of people are surviving. So the fear factor is not there like before. Okay, and that's why I keep saying we need to go back to the people adopt because there's a problem, there's a challenge they have, and that solution is dealing with that challenge. And that is why I think as banks, as fintechs, as regulators, we should put our effort. What are those things that will drive value for the consumer? And how do we ensure we continue to drive that?
Okay. Mr. Tijani, what do you think about that? Do we actually have to go back? Do you think that things will return to status quo after the pandemic?
Well, I think I agree that some things will return to status quo, but I don't think everything will return to status quo. I think what the pandemic has done is you can almost see the pandemic as a refresh button on the world. A lot of the effort that has gone into certain technologies in the last 10 to 15 years, they came to a point where those technologies were for the market, but the market weren't ready for adoption. So what you've seen with COVID-19 is a lot of those technologies have made their way into the market because people were relaxed about adoption. So technologies that were ready before COVID-19 will gain acceleration. An example of it is almost saying after COVID-19, webinars are going to reduce. Actually, webinars will not reduce, because what COVID-19 has demonstrated is that you can get quality people together regardless of where they are all over the world. Everybody in this call are in different locations all over the world. We're all coming together to talk. So you're going to find that will continue. That's not going to stop, because the time when people needed to invite Mr. Elegbe to South Africa on Monday, and he has to fight the Côte d'Ivoire on Wednesday, more people realize that that's not the best use of his time. So things like webinars will continue. Things around online education as well, which used to be really, really difficult in the past. People are now seeing the value to those systems. So a lot of those things will make their way into our lives. And for me, I'm not an expert in banking, and also neither am I an expert in financial services. But when I talk about financial services, the perspective I take is that financial services is literally about lifestyle. Everything we do as individuals is driven by the financial service providers. So for you guys to use this platform that you're using, I know you have to pay for every single user on this platform. So if as an organization in Nigeria, the system was not built for you to be able to make online payment, you would not have been able to consume this service. It's going to be the same for the parents who needs to pay for online education for their kids. Maybe 3 months ago, before COVID, they were not comfortable with doing online payment. But they've seen quality education online, and they know that the only way to pay is through Flutterwave. So they won't have an option but to pay through that system. Which is the same with healthcare, is the same with transportation, is the same with more people are now on Netflix in Nigeria as well. So a lot more people paying just to join those platforms. So I think we're going to see more of those things coming to mainstream. And going to the colleague from Access Bank, this is also where in Nigeria it may not be accelerating, but in the rest of the world it is. You're seeing more interest in cashless payments. It has accelerated in Nigeria. By the virtue of the pandemic, more people will be interested in cashless payments as well in Nigeria, whether we like it or not, because they're now more comfortable with it. You're seeing people now doing grocery shopping. By the time the pandemic is gone, it's going to go down, but there are people that will not go with it. So the level of adoption would come up. And I think there are things that the systems can do to support that, because a major part of digitizing financial services is trust. And when you look at well-established markets, say like the UK, for instance, when online payments and cashless society became the thing, the elderly folks were scared of paying online. But governments had to step in to look for ways to guarantee payment, which is why in the West, you see that credit card fraud is high. Because if you get access to my credit card and you spend it, if I can prove to my bank that I didn't make the spending, I'll get my money back. So that level of trust is what drives that adoption. And I think that's where we need to strike balance. So I agree with Mr. Elegbe that some things will go back to normal, but there were some things that have been waiting for this opportunity for a refresher that will not go back to normal. They will gain acceleration, and we need to embrace that. Banking is an example of it. I still don't understand why people need to queue as much, to bank in Nigeria. We need to start to think of changing that. We've seen online banks came to the market, but some of them still needed for you to bring your utility bill. CBN needs to find a way around that. There's going to be a way to do that verification that they want to do that doesn't require that you still need to take your NEPA bill or something to a place to confirm the banking. The world is moving, and there's nothing we can do about it. We can't stop it. And I think companies like InterSwitch actually led Nigeria on that path, making automated payments possible. And we're not going to stop because Nigerians like cash. It won't stop. It will accelerate. There will be challenges, but we need to create that environment for it to continue to move forward.
Okay. Thank you, Mr. Tijani. When you were talking about lifestyle and how fintech affects lifestyle, I was just thinking of the various regulators that you'd have to deal with. So, if it's health tech, you're talking NAFDAC, you're talking NICOM, perhaps, you're talking the SEC, even NURTW. And so I think I'd like to hear from Mr. Jimo at this point. Recently, the CBN, and we thought it was a very good move. The CBN released the exposure draft of the regulatory sandbox guidelines. I thought that was fantastic, right? But one thing that has been flagged by the industry experts is the possibility of overregulation. And so, a product that may be a fintech product might still span across several regulators. And I don't see that the sandbox has dealt with this. I'm just wondering, what's the CBN's plan to make this easier? Will you be looking at having like a one-stop shop where someone can just come and then, all the regulators can provide their services? Or will someone still have to go to the various regulators to get necessary consent?
Okay, thank you very much. This is a very, very tricky question. The CBN can only regulate the institutions within, our radar. Like if, for example, you are a technology company and you want to offer USSD technology service, NCC to get that. CBN cannot be a one-stop shop for you to get the license to provide payment services and also give you, a license to provide USSD or assign a unique code for you. So to that extent, CBN cannot be a one-stop shop for everything that you need to run your business. But once it concerns regulating the financial services, payment services, yes, CBN is a one-stop shop, regardless of the various departments that we have in CBN. Once you apply for a license or for an authorization, be rest assured that all the departments involved will come together under one umbrella and provide you that authorization. Talking about multiple regulation of this regulatory sandbox being too stringent for the small companies and all that, I think that's the major essence of this regulatory sandbox, basically to incubate innovation, to promote innovation. There are a couple of small companies, individuals that have fantastic ideas on providing financial services, and they can't go through the crucibles of applying for license, paying licensing fee, doing AIP, and then before you are granted commercial authorization. That's very expensive for them. And so the regulatory sandbox basically provide an environment where they can actually test their product in live, commercial mode, so that they can feel the value, the customers can experience it. The regulator can also, feel the risk that may crop up when they actually go, full blast. So that opportunity is what this regulatory sandbox is trying to promote. So in other words, you have situations where people can come to CBN to say, look, I have a fantastic idea, but I don't have what it takes in terms of financial and all the regulatory, checks to get a license. But allow me to test this and see whether it even works. Which is why one of the conditions of the regulatory sandbox application is that you must have a business solution to solve. You can't just bring a technology that doesn't have, value to the people. And primarily, we want something that promotes and deepens financial inclusion. So if what you're providing is something that has economic value to the whole country, yes, CBN will simply ask you, give you the authorization, the window to connect to banks, connect to any other, technology service providers to access their API, and then test your product. Once you've seen it and you are confident that this is working, then you can then come for full authorization. One of the advantages that this thing gives is that the investors typically will not want to release money unless they are sure that the regulator will give you a license. Now they are very, very comfortable that the regulator will allow you to test the product, and they can see that this product or products and services is commercially viable, it will sell, it's been accepted. So they can actually bring their money and invest because they've seen that it's going to work. So that's basically one of the fundamental advantages of this regulatory sandbox. In addition to the fact that it also gives us a kind of view. You have situations in other countries where what they do is to wait and see. They don't want to bring in any regulation. They just wait. Innovation comes. Everything just goes into the market. And then they now put regulation, which can then stifle a lot of progress. So this one will basically more or less like putting the innovators first and say, come up with any idea. You're free. Come and test. It's a free window for anyone to come and test innovation within the CBN, regulation.
Okay. Thank you, Mr. Bio. I'm sure that you're going to comment on the modalities for the operation of the sandbox from fintech lawyers. And just going to the polls, one of the questions we asked is, when was the last time you were in a banking hall? And the overwhelming number of it is before the pandemic. So we have three options before the pandemic, when the lockdown was lifted, but not since then. And one last option, I was in the banking hall just this week. Most of 66% of our audience have said that they were in the banking hall before the pandemic, which would be anywhere from February to late March. I think I'm getting an notification. I only have a few minutes left. Maybe we should just go right to the question, the Q&A. The first question that we have is for Mr. Tijani, and it says, where do you see, this is from Darren Shambore, and his question is, where do you see or suggest banks need to look to deploy capital in the post-COVID world to promote innovation in Nigeria?
My perception is that the biggest challenge for banks will be the threats that come from the fintechs. And to be honest, I think the fintechs are just simply application of technology to smartly deliver financial services. There's nothing special about it. Whether you're giving it to people or you're giving people the chance to save money or you're giving people the chance to be able to pay. This is exactly what's at the core of the services that banks provide. But I think to the banks, the volume at times may be what deceives the bank, that the volume of people that are ready for digital services, that volume is not big enough. And what I always tell people in tech is that it's actually not fractional. Two examples that I give to show the readiness is always in for the young people who know WIOT and exams that we do. At some point, these institutions transition to allowing people to be able to check their results online. So you buy a voucher, you go to a computer somewhere and you check your result. This is one of the services that is actually quite successful now. But because it's handled by contractors, people don't talk about it. Those services turn around billions of naira every year in just students going out to buy those vouchers. I think what is missing is the enabling environment. When banks find ways to make digital banking services more accessible for people, you will find that more and more people will actually transition into consuming those services. It's not by accident that you find young startups like Citibank, like Flutterwave, like Paystar, now coming up gradually. And what you tend to see there is that I still say there's no service that you find with these guys that banks can provide. The problem is just that banks find it difficult to quickly move to provide such services, to build the flexibility around their services, their enabling environment. And also banks are very, very tied to CBN's regulation as well, which sometimes startups can be flexible around. And I think that's the pain that we're going to face more and more, and that's where banks need to start to invest. How do we get financial services to be more about lifestyle? Banks need to invest in that. We do have conversations with Union Bank, with Stanbic, and everything we do, it's always around how do you embed digital financial services into the day-to-day activities that people conduct. Because that's what banking is about. That's what financial services is about. So investing in unlocking opportunity for innovation in all these different fields is where I think banks must focus on.
Thank you, Mr. Tijani. Mr. Lebe, what are your thoughts?
Yeah, I'm actually very happy you called me because the first question is, I hear this talk about fintechs becoming banks, getting bigger than banks, but nobody ever comes to ask fintechs, what's your long-term goal? Well, I can speak for instance, our long-term goal is not to become a bank. If that was our long-term goal, we would have applied for a banking license, all this one. Now, the term financial services is very broad. Banking is one part of financial services. Insurance is, lending is. There's nothing fundamentally wrong if a bank decides, I want to leverage technology from a third party to provide services to my customer. And it turns out that third party happens to be these companies we call fintechs. But to not think that because a bank is leveraging you to provide services, will complete the role of a bank. I will never put my money in a non-banking institution, because that regulation we all talk about that we don't like is the reason why I put my money in a bank. Is that safety? I don't want to leave my money with just anybody who is not regulated. I want my money to be regulated. I want convenience. And that convenience can be given to me by my bank through a third party or directly. Okay? What fintechs are doing is that they are bringing innovation into banking. And there's nothing wrong if banks decide to leverage fintechs to deliver service to the customer. But for as long as some of us who end up providing this service recognize that banks are regulated, and therefore we need to subject ourselves to the same regulations so that we can service the banks properly. No bank will work with you if at the end of the day working with you means that they're going to be penalized. So as fintech, we also need to recognize that as a service provider to a bank, the banks are bound by certain rules and will become relevant as long as we're able to show to the banks that we will work to ensure that we help you abide by those rules. Same thing in health tech. When you go into health tech, there are a lot of issues you need to deal with. Some hospitals will not touch you if you cannot guarantee them that you will abide by the tenets of that line of business. Now, in this particular, the regulator is not the central bank. So there may be no real regulator there, but the code of conduct in medicine forces you not to do certain kind of things. So if I'm going to approach a hospital with my technology service, which in this case we call health tech, I need to convince the hospital that I will abide by the tenet of what they do in this area of medicine. Same thing if I move into transportation or any other place. So I think people should stop confusing this feeling that because we are growing well, helping banks to provide financial services, we can do banking. I will not put my money in a fintech because I need a regulation. That is the safety net that allows me to put my money. So let's separate banking from general financial services.
Okay. So what's key is confidence and stability, as well as convenience. Great, understood. I think the next question that I have, I would like to hear from both Mr. Jimo and Mr. Azegbe. And just before I ask the question, just to say that from our poll, we have 77% of our viewers being lawyers. So gentlemen, be very careful in your responses because, we're writing, we're taking notes. And the question is on the GSI guideline. So will a creditor's ability to reach funds manage the credits of other borrowers or other borrower accounts as per the guidelines take into consideration funds in accounts that are already charged to a different lender?
Sorry, can you repeat the question again?
Will the creditor's ability to reach funds in a borrower's accounts take into consideration funds and accounts that are already charged to a lender? So the GSI says if your borrower defaults, he can go to his account with all the other banks. What happens if an account in another bank is charged? How will the GSI guidelines operate in that scenario?
So when you say the account is charged, that means the account there is already encumbered. Is that what you mean?
Yes, sir. Yes, the security of that account.
Yeah.
Yes, sir.
It's technology driven. This thing is technology driven, and so it's like a surveillance system that goes around and checks all the accounts. So if that one is already encumbered, it means it's already been held for other uses. Maybe you have defaulted to 2 banks. Each of those banks will be looking for where do you have the money and all that. And wherever they have it, they just take it. Once it's been taken, that is off your balance. You don't have that amount. And then the next bank again that you have defaulted to go around and try to check. That the most important thing is to instill discipline within the financial system. So wherever you have money, it is your money as long as you can trace it to your BVN. BVN will be the key factor here that can tie it to the ownership of that money. As long as your money, with wherever bank that money stays in and you are defaulted, the system can do the
Okay.
So
Thank you, sir. Mr. Zegbe.
My
If I may
related
add
question.
Jim just said, typically, once any sum of money is encumbered, it's usually not available to the customer. So usually, for such funds, it won't be funds that a customer can access on his own. And so what the GSI will simply do is look around for all the monies that are available to you as a customer that you have access to. And anyone that is encumbered, usually the practice at the times is that it's not within reach for the customer at the time.
Okay. All right. Someone has a question, and this can only be for the CBN. Will there be a unified exchange rate system, Mr. Jimo?
I am not prepared for that question here, honestly speaking. I honestly, I don't have the answer to that one.
Can I ask Mr. Jimo a question?
Yes, yeah, right.
Okay, so this system we put in place now to help in recovering loans that people have taken from banks and they defaulted on, can it be applied to fraudsters?
In what sense?
So there is a fraud that has taken place in one particular bank, but that fraudster has basically emptied his account, so we can't recover the money from that bank. But somehow, through BVN, we can track that he has monies in other banks. Can the money still be recovered? So in one particular case, they're recovering a loan, but in this particular case, we're recovering something that is not even a loan, that was taken forcefully. Can it be applied to it? Is this something that's been given consideration?
Well, first we need to dimension this question because I know, what brought about this. Now, if there is an established, fraud case in a bank, the policy that we have now on BVN is that that particular customer should be watch listed. The bank would identify that there is a fraud established through the law code that there is a fraud, and then you go and watch list the customer, basically to alert other banks to very wary of banking this particular customer. Now, in a case where money is taken into an account, and then the fraudster has emptied the account, right? And then it's now established that the money is sitting on another bank. For example, the money is transferred. The money could be transferred to another bank, or the money could be withdrawn cash, and so it's out of the system. Now, if it is established that the money has gone to another bank, we have an internal mechanism for tracking the money to that account and blocking the account so that the owner can come forward to challenge why the account is blocked. And then that case can be brought forward. That's another one. Now, the other way that this thing can be implemented, and that has to be bank-to-bank arrangement, is where the money is stolen from one bank and taken to another, and then that account is empty. Now, if you pass a debit, which is the recovery process now, if you pass a debit to that account, if, for example, you ask the customer to come and explain why this money came to the account and why the money has been taken, and the customer refuses and you pass a debit, which is the recovery you are trying to do now, and it throws the account into negative, it becomes an holding, it becomes a loan. And once that happens, then that bank should have the latitude to apply the GSI to say, look, you are now owing me because your account is in debit, and anywhere I get it, I will take it. But it has to be with the consent of the customer. The reason I'm saying this is that I know the issue that you are discussing now, and we're still trying to find a very smooth way of getting this thing resolved. A situation where there's a glitch in the system and somebody's account is credited erroneously, and then the customer, knowing that this is an erroneous credit, refuses to refund the money, and it takes the money and disappears from the system. The BVN system will enable us to trace the customer, and we will be able to watch list the customer. I think the pain of watch listing is enough for the customer to come forward and rectify that account. But now, I am not sure you can apply the GSI because it's not a loan. The other bank has not granted it a loan. The guy only withdrew from his account. Unless you can establish, that this is a fraud, then you can apply the GSI.
Okay, thank you.
I think we'll probably just take one last question because I'm being told that we're almost out of time. Only for the transaction to subsequently reverse. There is also
Sorry,
the
I
issue
didn't
of...
hear you. Can you start over? Your mic was muted somehow.
Okay, I'll start again. Can you hear me?
Yeah, I can hear you.
Okay, so digital banking is great, but how do you deal with the issue of reversals? For instance, several times I have made online transfers, sent evidence of same to the recipient, only for the transaction to subsequently reverse. There's also the if this solves the barest minimum, if any at all.
Obviously, the question is for me, right?
Either that would be for either Mr. Elegbe or Mr. Azegbe.
Okay. So let me start by saying that the digital platforms work, and
Mr. Elegbe, you can probably go ahead. I think we're having difficulty connecting with Mr. Azegbe.
Can you hear me?
We can hear him.
Yeah, we can hear him.
Okay, so I was saying that.
Okay.
First of all, let me say that the digital platforms work.
Mr. Azegbe, please go ahead.
It is great to know that several millions of transactions happen every day. Now, unfortunately, the entire...
Okay, so since, I can't hear him, maybe we'll just move to another question then. Oh, you can hear him. Okay, fine.
I think everybody else can hear him. Can hear him.
I think the audio is having a problem.
So I was saying that the various stakeholders that are involved in the entire chain of events that lead to a transaction from start to finish is not just a single entity. We have several entities. And those are the places where you find failures happen because of the various interactions that have to happen before the transaction is consummated. Now, what the good thing is that the financial institutions or the banks today are beginning to invest heavily in the necessary technology and the tools that you require to complete a transaction cycle, and even where there are failures, to identify them very readily and correct those failures, so that it's not the typical practice of you've done a transaction, you delay, you have to wait 24 hours, 48 hours, or even longer before you get a reversal. In fact, recently, the central bank has also been very focused on creating that framework that allows every independent stakeholder in this regard to play their bits, so that from start to finish, we are able to complete transactions, and then customers do not suffer the difficulties of having their transactions fail, and then reversals or double debits or double credits, like the person that asked the question had said. So you find us talk a lot about robotics and automation today for reconciliation, because those are things that need to happen. And it is only when you are able to create those tools and those platforms.
Okay, I'm not sure if Mr. Azegbe is still speaking, because I can't hear him, but I'm being told that we're out of time anyway. So it's so funny, I can't. Okay.
I can hear you.
Okay, so Mr. Legbe, I don't know
great.
if I want to add anything to what I've just said, but those are the issues that are around the payment system as it is today. And I know that as an industry, within all stakeholder groups, there is a lot of collaboration that is ongoing to see that the handshake from one party to another is complete, so that we don't have failures happen and they go, and then we pass that problem to the consumer.
Okay, I think Mr. Azegbe is done right now.
I'm done. Did anybody hear me?
Okay, great. Thank you. So I think we've probably come to the end of the session. So I'll just allow our panelists to give us their closing remarks in 1 minute each. What I'd be keen to hear is what you think the next level is. What we've seen is a lot of innovation. We've seen companies come up with new product offerings in this time, and we've seen a lot of things fast tracked. So what do you think is the next level that we should be looking at in the financial services sector?
I'd like to go first. I would like to maybe change the approach, starting from what you have said. I'd just like to hinge on something that Bosu said earlier. Post-COVID, there will be a new normal. Everybody talks about that. Everybody says it will be normal, but it will be new. But there's a perspective I just want to bring in. What will institutions are suffering now do post-COVID? Will they fight back? We know that travel and tourism have suffered. Will they fight back? Will airlines try to bounce back? Will airlines try to look for ways to make us not use technology like this as a means of communicating? Will they come up with special packages that will make you and I see the need to travel again? Will the cost of tickets come down? Will the cost of hotels be reduced? Will there be special packages to entice us to move? I think when we all look at the fact that people have adopted technology, we have done that at the expense of certain institutions that have been there for hundreds of years. These institutions have investors, they have employees, they have shareholders. What do we expect them to do? My gut feel is that a lot of institutions will fight back. They will fight back for my patronage. Will they be successful? I don't know. We've already seen airlines redesigning planes. We expect hotels to come with special packages. I expect to see some strategic alliances between hotels and airlines and tourist destinations, because they all suffered simultaneously because of COVID-19. And to fight back, I will see a lot of strategic alliances being formed by some of these parties that may have suffered in a bid to bring back their business, because they're not going to sit down and face and put their arms. I think it's one area we should all have at the back of our minds when we think about the next level.
Thank you, sir. Mr. Tijani?
To follow on what Mr. Elebe said, absolutely. I think what we've always known technology for is the empowerment of consumers. Technology gives consumers the power, to demand for more. You can only, the easiest way to think about it is think of shopping before the internet and think of shopping now. Most people, before they buy anything, they go online to go learn and understand what they want to buy before they purchase. And before COVID, there were certain services that you could almost interpret as pushed solutions, the solutions that were being forced on people. People didn't understand why they needed to use them. But a lot of those solutions are now being pulled because people can now appreciate why those solutions are needed. And I think this is where companies will need to be smart and to be creative and also be innovative as well. A lot of the companies that Mr. Elebe mentioned would probably rush into digital innovation because they are being told to find ways to be part of the new normal. But that may not be the solution. The solution will be that companies will need to have a better understanding of the people they serve and how these people want to consume their solutions. And that's what should determine and lead their application of digital technologies and innovation. And I think, it's where we're going. We know digital adds value to the economy. The level of productivity with digital goes up, and we can't say that because certain things are not in place in our own country or our economy that we're going to slow things down. I think collectively we need to look at how do we progress with this new development, but do it in value to the economy at large. Thank you.
I don't know if Mr. Tijani is done because I couldn't hear him. Okay, thank you. Thank you very much, Mr. Tijani. Mr. Azegbe and Mr. Jimo. I'll take Mr. Jimo first, please.
Okay, thank you very much. First, let me thank the organizers of this event for bringing this together. And what I think I've seen here is, the zeal to promote and encourage financial technology industries to provide more customer, oriented services. And that's basically the spirit, driving the CBN's fintech regulation this year, which is to make sure that we create a very symbiotic environment where the technology companies and the banks or any other financial service providers can actually come together and provide services that would better the lot of Nigerians, and particularly to deepen our financial inclusion. And we will be driving from that perspective. We'll be providing environment, we'll be stimulating environment and encouraging environment that will make the fintechs, to come forward and work with the banks to provide the accounts information, to provide services that consumers can now have choices to select. And so to anchor that, we are coming out with an open banking regulation, and any moment from now we'll be out there in the market again to share with the public the principle of open banking and open API. That is also one of the major strategic initiatives of Central Bank this year, which we intend to pursue in addition to the regulatory sandbox, which is also designed to encourage small businesses who want to come and test their innovations in the market. So a couple of regulations will actually come up to strengthen the environment and to encourage small businesses, innovators, to come up with creative products and services that can advance the well-being of Nigerians and that can lower the cost of services to the public. Thank you.
Thank you, sir. And I think just one last word from Mr. Azegbe before we go to close.
Thank you. My last word would be that the fintechs and the banks are not in competition, but they're working together. And so increasingly, post-COVID, what we would expect to see a lot of collaboration between the banks and the fintechs, because obviously the world as we knew it before is no longer the way we would see it in the future. And as such, the changes that are beginning to happen can only be enlarged and become even better by the fact of the virtue of the collaboration that we see between the banks and the fintechs. And I dare say that is already happening. We already have across all the banks today, you have the power like school banks that are beginning to think along those lines and take away from the traditional mindset of the traditional way we used to know banking. Thank you.
Thank you very much, sir. I'd like to thank our audience. I'm seeing some really great questions. Unfortunately, we can't take all the questions, but thank you, Abdullah Gulabi. Thank you, Chechi. Like Oyemi said, we're going to be collating all the questions and getting responses from our panelists who graciously agreed to respond to these questions. And so we'll make all the responses available to you. But I'd like to also thank my panelists. Thank you for taking out time to share your perspectives with us.